let's go into actually preparing a worksheet. What will happen is, after a period of time, you'll create a worksheet which just is working papers for preparation to completing financial statements. So for example, at the end of the year, you'll complete a worksheet and you will do something called adjusting entries to update those accounts that need to be updated. And one of them we've talked about already, and that is prepaid rent. Remember prepaid rent before? Okay. If not, we'll talk about it here in a second. But first of all, what is a worksheet? It's a multi-column form that begins with a trial balance. Remember what a trial balance is? What is a trial balance? It's a listing of all of the accounts in your general ledger, and this book indicates that it's a listing of all the accounts with balances. So what they're saying is this: include only the accounts with balances. If an account has been established but has nothing in it, you don't put it on the worksheet. Now I'm going to give you a little bit of information regarding that, because different textbooks do this one differently. For the purposes of this book and your assignments and my accounting lab, you'll need to list only those accounts with balances on your worksheet. Is that clear? Only those accounts with balances. In the process of doing adjusting entries, if more accounts need to be used for those adjusting entries, you'll add them at the bottom. Now, this method is required for my accounting lab, or it won't treat it as being correct. In actuality, I find it far easier to do it this way, and that's just to list all of your accounts in the general ledger, whether they have balances or not. So if you need to use them for adjusting entries, they're already there, and they're in order. So for example, when you do your mini practice set, if you want to do a worksheet that way, it's okay, because you're not entering anything in my accounting lab. All right? But for assignments, do it the way they instruct you. So the first thing you're going to do is take the balances from your general ledger accounts and put them in the columns for the trial balance. They'll either have debit balances or credit. So the first two columns of figures are going to be debits. The second one is going to be credits for all accounts that have balances. You're going to total up those two amounts, or two columns, debit and credit. Should they balance? Yes. Because what happens in accounting? Debits must equal credits. If they don't balance, what are you going to do? Find out why. You're going to go back to your ledger accounts, make sure you put the right balances in. If you did, you're going to make sure that you computed the correct balances for each ledger account and that you didn't miss something. So again, that trial balance must balance before you go on. The next step is to prepare adjustments. And we're going to show you how to do that here in a minute. One example besides prepaid rent is supplies. Do you use up supplies? Yes. Do you use them up frequently? Would you want to reduce the supply account every time you used a piece of paper or a pen, or no? So instead, what we're going to do is we're going to do an inventory at the end of a period of time, and then we're going to update that asset supplies. So what we're going to do for adjustments, again, is update accounts to reflect changes in that account during the period of time for the specific worksheet. The next thing we're going to do after we do all those adjustments is to prepare what's called an adjusted trial balance. We'll look at the original trial balance, see the adjustments made, and we'll come up with new balances. And from those new balances, we'll create financial statements. But first of all, let's go ahead and look at the steps involved Some of these steps are review, but we're going through a next step in the process of the accounting cycle. First of all, we start with business transactions that occur. From those, we must analyze and record them. And where are we recording these transactions? In the general journal. That's part of your quiz for today. Remember, journalizing business transactions. We then go and post that information to the ledger, the general ledger, to each individual account. The next step is to prepare a worksheet. Because even though we've recorded all these transactions in the journal and posted to the ledger, at the end of a period of time, we're going to do a worksheet, which is going to allow us to adjust some of the accounts that need adjusting. It will also allow us to create and determine financial statements and net income or net loss. So let's look at the step here. Items to be adjusted. We're going to show you some examples of items that we will adjust and how we will adjust them. And then we're going to do some practice doing a worksheet. So items to be adjusted, one of them could be office supplies or any kind of supply. Another one is prepaid rent or possibly prepaid advertising. What is prepaid rent and prepaid advertising? It is an asset, correct. Something that has value because we've paid for it in advance. So as time goes by and we use up that month's worth of advertising we've paid for or that month's worth of rent that we've paid for, we'll need to adjust the value of that asset. Equipment. We've just talked about that. We can depreciate equipment. So we're going to have to do an adjustment for depreciation. And expenses also get impacted by those things, so expenses are going to be adjusted. Actually, they're going to be increased during adjusting entries. So, first example, adjusting prepaid rent. The information given here for the example is prepaid rent at the beginning of the month is $3,000. It's good for how many months? 6 months. So if we want to do an adjustment at the end of the month, how much is that adjustment? How'd you get 500? Yes. The total prepaid rent was $3,000. It's good for 6 months, so 3,000 divided by 6 is 500. So 1 month 1 month adjusting for prepaid rent is 500. So we're going to debit rent expense because it's now become an expense of our business. We've used up that rent. And look what happens to prepaid rent. It gets credited. What happens when you credit an asset? It subtracts or goes down. So the value of prepaid rent is going to go down. Has less value because we've used part of it up, or 1 month's worth. Yeah. Yes, this is just showing the adjustments, not showing the balance in it. So what would this actually have on the debit side here? 3,000. So therefore, what would be the balance in prepaid rent after this adjustment? 2,500. Is that the true value now after a month has gone by? Yes, makes sense. Now, adjusting supplies. Remember we talked about supplies will be used And instead of every time we use supplies to deduct it from the asset, we're going to do an adjusting entry. And how do we find out how much we've used? Inventory the supplies. So you can do it as frequently or infrequently as you'd like, usually at least once a year. So you can do the adjustment. And you're going to determine the amount of supplies used. Determine the amount of supplies used. A couple warnings regarding this. This information will always be presented to you in a different format. For example, they may give you this type of information. Supplies started with $2,000 value. Inventory shows that $500 was used. What would be the adjusting with that information? How much would you expense out based on the information I just gave you? 500 used. The expense is whatever is gone or used. So that was given to us. Therefore, you would debit supplies expense for 500 and credit the asset supplies for that same amount. Okay? Does that make sense? So supplies now has a value of how much? 2,000 minus 5 is 1,500. Good. What happens, however, if the information states this? Supplies has a beginning balance of 2,000, but after inventory, the inventory amount shows that $1,200 in supplies is still remaining. Good. So the adjusting entry is going to be for the amount used, not remaining. So you're going to take 2,000 minus the remaining to get the amount used, which would be 800. So in that case, you would debit supplies expense for 800 and decrease supplies by crediting it for the same amount. Do you see how that's working? You're adjusting the asset and you're expensing it out. Depreciation. Another one we're going to adjust. Company bought a piece of equipment that has a cost of $48,000 with no residual or salvage value at the end of its useful life. And its useful life happens to be 10 years. I've made this easy. So we're going to take $48,000, the cost, divided by 120. Why 120? Right. 10 years times 12 will give us the months, which will then give us an amount of depreciation per month. And that's going to be how much? 400 in depreciation a month. So therefore, for this specific adjustment, you would debit depreciation expense for 400. 1 month's depreciation. And the credit goes to? Good. Accumulated depreciation for the same amount. Debits must equal credits. Now, first of all, let's do a quick review here then. Accumulated depreciation is what type of an account? A contra, specifically, a contra what? Contra asset account. It's the opposite as an asset account. So therefore, it has the opposite balance side, which is why we're crediting that account for this adjustment. So again, debiting the depreciation expense, crediting accumulated depreciation for that equipment for the same amount. Now, the last one we're going to talk about today for adjustments is adjustments for accrued expenses. For example, when you get paid, are you paid through that last day you worked? No. Like today's the end of the pay period. Do you get paid today? No. I mean, few exceptions, but most businesses don't. They have a lag period. So you can submit your time and they have time to process payroll. So therefore, at any given time, you've actually earned wages or salaries, correct? But haven't been paid. To accurately reflect that expense for the business, we need to record it as an adjustment. So let's look at this example. Employee salaries are $100 a day for a 5-day work week. Record salaries accrues but unpaid. So there's been 5 days you've worked, but you haven't been paid yet. So to adjust that, we're going to debit salaries expense for 500, the 5 days we've worked. And we're going to credit what? Salaries payable. What kind of an account is salaries payable? Liability, which means that's a debt we're incurring. You've earned the salary, so we have to pay you, but we're not going to pay you now. So therefore, we're incurring a debt for $500. But we can expense it out, showing that it is an expense of the business right now. Okay, any questions on that one? Okay, what I'd like you to do is to pull out the worksheet that I gave you. The worksheet that I gave you. And what we're going to do is we're going to go through some information on that. And you can also find it if you want to do practice at home. On your Moodle site, under this week's work, you'll see some practice worksheets. There's this one and another one. These are ones you can use to do this again after today's class. Let's do a pause. Okay, so look at the information at the bottom of the form that you have. And it's some data that you need to do this worksheet. The first part we're going to deal with is the adjustment column shown here. However, the first part's been done for you. Where would you get all of these accounts and balances? Good. From your general ledger. These are going to be those accounts with balances, and they're listed in which order? Assets, liabilities, owner's equity, etc. Or in numerical order by their account numbers. So it's going to be easy to determine the order. And we just simply list them and their balances. Notice that the two totals match. Has to happen. Debits must equal credits. Once we're done transferring the information from the ledger accounts to the trial balance portion of the worksheet, we're ready to do what's called adjustments. Look at the data at the bottom. The first one says, prepaid insurance consists of 12 months of insurance purchased at the beginning of June. What is it now? The end of June. So how much time has passed? 1 month. If prepaid insurance was purchased at the beginning, and what is the balance in it? $3,600. So what's the adjustment going to be? $300. So what are we going to put for the debit for this adjustment for prepaid insurance? Okay. We're going to put in, do you see, it's called, not rent, insurance expense. Do you see an insurance expense up here? So we need to add it. So you're going to come right down here, and you're simply going to write in insurance expense. And it goes in the adjustment columns here, and is an expense a debit or a credit? So we're going to put in the debit column 300. Remember, for every transaction, you must have equal debits and credits. What's the credit going to go to? Good. We're going to come up to prepaid insurance, and we're going to put it in as a credit. So are we in agreement for that one? Does it make sense that we would credit an asset to reduce it? Yes. Okay, that is the first adjustment given. First adjustment, we're done. Second one, supplies on hand on June 30th equal 300. What do we need to do with that information? Okay, we need to see what we started with. We started with how much in supplies? And if we have 300 left, what does that tell you? We used up 1,200. So we're going to expense out the amount we used. So what expense would that go to? Supplies expense. Do you see it listed here? So we're going to add it. And expenses are debits. So if we're debiting supplies expense, what are we going to credit? Good. Supplies. So up here in the adjustment column, you're going to put a $1,200 credit to supplies. Next one. Equipment has an estimated useful life of 5 years or 16 months. Expected useful life of 5 years or 16 months. So 6,000 divided by 60 is how much? So 100 depreciation per month. And this worksheet is for how many months? 1. So what is our debit for this adjustment? Okay, be careful. What is our debit? Depreciation expense. And how much did we determine it would be? 100. And the credit goes to? Pardon? Okay, remember depreciation doesn't get reflected in the asset account, but in the contra asset account called? Good. And I'm going to abbreviate accumulated ACC. So accumulated depreciation, we can put equipment. For what amount? The same. So that is a credit. So we have a $100 debit to depreciation expense and a $100 credit. You always want to look up here, though, to see if the account is already listed. If not, then you add it, but only if it's not up here already. Now, the last adjustment is this. Salaries earned but not paid for June, 500. Salaries earned but not paid. Okay, do we see a salaries expense up here? All right. So across from salaries expense, you're going to put in 500. And what's the credit for this adjustment? Okay, probably not accounts payable, but something called? Good. Salaries payable. So again, our debit equals our credit. Now, the next step in this worksheet process is to total up your columns again, since we're done with adjustments. So, to total, you always single rule and add up the two columns, the debit and the credit, and go ahead and add yours up. And hopefully you'll match what I have. It's also a check to see if you've done it correctly. Now, what do you usually do when things are in agreement? Good. Double rule. Now we're ready to go to the next set of columns here. And notice what the caption is, adjusted trial balance. This means we're going to look at what we began with for all of the accounts and see the adjustments that impacted them and possibly come up with new balances or bring over the original one. So let's go down them one at a time. Cash, any adjustment? So what are we going to put in the adjusted trial balance? Good, 10,000. How about accounts receivable? Bring over 4,200. How about supplies? Take a look here. 1,500 debit, 1,200 credit. What's the balance? 300. It's still a debit. The debit side is larger. Prepaid insurance. We began with 3,600. We had a $300 credit. What's the balance for prepaid insurance? Good. 3,300. Remember, you put the balance on the bigger side. How about for equipment? 6,000. Just bring over the original balance. No adjustments. Accounts payable? Good. Alice Capital? Alice Drawing? 1,200. How about fees income or your revenue account? 15,600. Now, for salaries expense, we began with 1,800. We have another adjustment debit of 500. So we add them together to get rent expense. How much? 400. Advertising, 300. Are we done? No, we added some over here. Even though they were on the original trial balance because they didn't have balances, they now have balances because of the adjustments. So, for insurance expense, we're going to bring over 300. Make sure it's in the debit. Expenses are debits. Supplies expense, 1,200. Depreciation expense, 100. And accumulated depreciation equipment, make sure it gets put in the credit column. And salaries payable, liabilities have credit balances. So 500 in the credit column. Now, our adjusted trial balance is complete. So we put a line underneath and we add them up. Hopefully you brought your calculator today. I'll make it easier for you. Credits equal 29,600. Hopefully debits equal the same. If your adjusted trial balance does not balance, you've done some computation error combining the trial balance with your adjustments. And again, once they're in balance, you double rule. Okay, everybody with me to this point? Now, this is where you're going to pull from what you already know. Which of these accounts are reflected on your income statement? Revenue and expenses. Where do you find that in this list? Good. So starting here below drawing or withdrawals, you're going to go to fees income, include these expenses here. So let's go over to your income statement, put in the balance for fees income, make sure it's a credit because revenue is a credit balance account. List your adjusted trial balance amounts for all the expenses. And don't forget to add those added down here at the bottom. So we're going to include insurance expense, supplies expense, depreciation expense. How about these last two? No, not expenses, are they? So we can't include them on the income statement. Now, if things were all listed in order, like I had suggested, they would all be in order and you would just have to add everything below the drawing or withdrawals account. But because it's not, we're going to put a line here, just where the other one was, and we're going to add up the two columns. The credit column's easy to add. We only have one amount in it. But the debit column is going to have a different amount. $4,600. Oh my, it doesn't agree. What's that mean? It simply means this. Your revenue was not the same as your expenses. Is that a good thing? It is if your revenue is more than your expenses. And is your revenue more than your expenses? Yes. So this is the next step. And I'm going to move this up so everyone can see. When you get to the totals for the debit and credit for the income statement, you're going to take the lower amount and subtract it from the higher amount. So you're going to take the $4,600 and subtract it from the $15,600. What is the end result? $11,000. You're going to take that amount and add it to the lower total. So you're going to add it right here to the debit side. And then you're going to put another ruling underneath across both columns. And you're going to add these two up. And what will you get for the debit? $15,600. And of course, we know what we get for the credit. $15,600. Do we agree? So what did this $11,000 mean? If we made $15,600 in revenue, but we spent $4,600 in expenses, what does this amount reflect? Net income. So over here, across in this row, we're going to put net income. So we're going to write in the words net income. What if this had been a net loss? You would be crediting it. because this side would have been bigger. Therefore, we would have put net loss over here. So it depends on if your revenue exceeds your expenses. Now, because we know what goes on the income statement, remember what goes on the balance sheet. Everything else, or assets, liability, and capital. And we're going to include withdrawals in that because it does impact capital. So everything above this and these two accounts down here, because one of them is accumulated depreciation equipment, which is what type of an account? Contra asset. And salaries payable, which is a liability, gets extended to the balance sheet columns. So let's do that. Cash comes over here, 10,000, 4,200 for accounts receivable, 300 for supplies, 3,300 for prepaid insurance, and 6,000 for equipment. We also want to include liabilities, accounts payable, 2,500. And down here, salaries payable of how much? 500. Good. Now, we also want to include that capital amount, 10,900. And impacted by withdrawals or drawing of how much? 1,200. Now, one more thing down here at the bottom for adjusting entries that we haven't put anywhere. Accumulated depreciation equipment is a credit. It's a contra asset, therefore has a credit balance. That must also be included down here. Anything else? Have we have everything? Everything above revenue listed up here, and then the two that we added down here. Now you're ready to rule, and I want you to add up your debits and credit columns to see what you get. What are you getting for the debit column? Hopefully the same as I did. Did you get 25,000? Yeah. What did you get for the credit? Hopefully 14,000. But they don't agree. Yeah. We haven't taken into account that we made money. And when we make money, capital gets increased, which we haven't done yet. So we're going to have to extend this. If we put it as a debit on the income statement and debits must equal credits, what do we have to do on the balance sheet? Put it as a credit. So down here we're going to take the 11,000 and put it as a credit to the balance sheet. And again, we're going to rule. And let's see if we agree now. 11,000 plus 14,000 is 25,000. And we bring down this amount. And we are in balance. Amazing. Now, I missed a zero. Oops, thank you. What do you do with totals once they balance? Double rule them. And that is completing a worksheet.